Good evening, this is Ryan Mallory for SharePlanner.com. Today is September 29th, 2010. We are quickly coming up on quarter end here, and it should be one that goes out with a bang with GDP and jobless claims both coming out tomorrow at 8:30 a.m. It's a double whammy, and if you have been reading any of my trading plans, you'll see that I mentioned that the last 5 quarter-end days have resulted in negative returns. The last positive return was back on March of 2009. So that is something to keep in mind as we head into tomorrow. As far as the weeks and how they've typically closed out on quarter ends, only one of the past 4 quarter-end weeks have been bullish returns. 3 out of 6 dating back to January of 2009. But as you can see, historic norms don't always play out the way we want. Following options expiration, earlier this month we would usually see a bearish week. We got a positive week, and September, from historical norms, is usually the worst month of the trading year. It's been one of the best trading months for the month of September in particular in decades. So you can't always depend on historical norms to tell you exactly what's going to happen. They do give you a little bit of a guidance. So what we will see tomorrow is if the GDP is good and the jobless claims are well received by the market, we're probably going to see a significant rally. Numbers are bad, GDP comes in horrific. This could definitely be the end of it for now for the bulls. Tomorrow has every bit of has the recipe for it to be a game changer tomorrow. I'm going to look here at the S&P 500 and tell you what I'm seeing here. You notice that we've run into some resistance here over the past 4 days. We can't get past that 1150 mark on the S&P. 4 days now and counting. Tomorrow at 8:30, if numbers are good, we could easily gap up past that, and we give the market a lot of room to run, maybe even up to the high 1160s, low 1170s range if the market was, or if the report was that good. But what it's got to do is, you see this rising channel. Hopefully you can make it out here with all the moving averages and other drawings I've got on here. But you got this channel here, parallel channels that the market's been trading in since the June lows. So we go up, we come back down, bounce off of that again, and now we're at the very top of it, and that is a bit concerning for me. But what an incredible bullish breakout it can be, though, if the market can push through that overhead support. Otherwise, the numbers are bad. You have a perfect technical reason for believing that this market's going to be heading back down to this 1060 area. As far as being oversold, we are to a certain degree, but one thing that I do believe that in bullish markets overbought, one thing about being overbought in a bullish market is it can be sustained a whole lot longer than it is in a bear market as far as being oversold in a bear market. Rallies, when they're legitimate, they can stay in overbought territory for a very long time, so keep that in mind as well. The T2108, we're at 83. This is very, very indicative of an overbought market as well. However, as you can see here, when we had our March rally through April, we stayed there a very long time. If you just go back from a historical perspective, when these levels are reached, they are sustained for quite some time. Few positions. You've heard me talk about Tick before. This stock is unbelievable. Bought it at 877. Now looking at 1045. I've got no plans to sell it. I will be tightening the stop loss and let that play itself out as at will. But the stock's been phenomenal. Has a 10% dividend, so I'm a proud holder of that particular equity. BRKR, stock that I had bought with LMT to the short side, Bruker as a setup to the long side. You have your inverse head and shoulders that has been confirmed in recent days, and now we are breaking out. So I do have high expectations for this stock in the days ahead. This 1460 level is going to be a little bit of resistance, but if this inverse head and shoulders confirmation plays out like it should, we could easily see the stock move up into the high 15s. CVX, probably one of the best performers in the portfolio right now. I bought it here when it was consolidating after confirming this inverse head and shoulders pattern, and since then it has been rallying pretty well, and quite well in the face of some indecision by the market in general. Delta Airlines, this has probably been one of the more frustrating, but yet from a technical standpoint, it's managed to hold the trend line quite well and in a very impressive manner. You've had the trend or the merger news, and that wasn't well received by Delta, as it was considered to be a play for the Atlanta hub when Southwest announced a buyout of AirTran. But as you can see here, the trend is very much intact. We've tested it 3 days in a row now, 4 out of the last 5, and we've maintained it each and every time. Once again, a good report tomorrow. The stock could bust through the $12 range. ELY, this stock has a lot of potential as well. It's definitely got some overhead resistance right now coming in from this wedge that's sort of trapped in, but what I really like about this one is not only the trend, but you got this little cup and handle here that has yet to confirm, but once it does, also has a lot of breakout opportunities too. Illinois Tool and Works just paid out a dividend. I think it was I want to say like a 0.6% dividend. So, but besides that, it's consolidating very, very nicely here with the double bottom in place. That's about it for that one. LMT, this stock here, I've been short. I need to fix this trend line here. Let's see. It's probably not going to let me. Oh, here we go. Fix this trend line here so it's a little bit more perpendicular. This is the range that it's basically been trading in over the course of since April here. The thesis on this one is for it to continue to trade in this channel, and so far it has done just as much. QQQQ, bought this one I think 2 days ago on 927. Solid trending pattern here. Reason why I went with QQQ instead of a stock like Netflix or Apple or Google, tech has been on a huge rampage, and I didn't have any tech exposure in my portfolio, and didn't want to jump in on Apple, where it seems like the rally has just really been, I guess the gist of the rally might be already realized. So QQQQ, it has about 10% ownership in Apple, so I do get a little bit of that exposure, but I didn't want to go full board with Apple as an equity. SSO, inverse head and shoulders, just like that on the S&P. And a new stock pick today. I wasn't planning on really buying anything, but I did buy FRG. And this particular stock, draw this trend line here, has done a very nice job of maintaining the trend since November of 2008. Very, very big speculative play. I didn't really put much money on this particular stock, so I can let it run against me if necessary. You know, for a time, 10-15%. If it gets too wild, I'll pull the plug on it. But it's a very small portion of my portfolio. That's it for now. I put a couple of stock picks out there with KLIC and Blue Nile, NILE. Take a look at those. I think they can be a benefit for you guys, especially if the market does turn down tomorrow. Those would be some good short positions to be holding. So that's it for now. As for me, I'm hoping that the GDP and jobless claims tomorrow is well received by the market. If not, we'll have to manage the portfolio accordingly. So long.